Good morning and namaskar to all the participants. It's good to see so many participants and good to see so many MDs and CEOs of banks who are participating in this conclave. And I would like to thank at the outset Business Standard for inviting me to be here. And I have been watching very carefully the proceedings, not live, but subsequently. I have been keeping track of the proceedings of this conclave, of this event which you have arranged over the last fortnight or so. So my congratulations to Business Standard. And when Tamal spoke to me and invited me, obviously it was not possible for me to say no. And Shyamalji, you will agree that, and you will remember that I had earlier agreed to participate in a similar event, but because of the interruption of the pandemic, that event could not take place. And but anyway, I'm extremely happy to be here. And since today's session is devoted to banking, I would confine my address primarily to the area of banking. The COVID-19 pandemic still continues to keep the world on the edge. The pandemic has so far infected more than 2-3 crore people and has claimed more than 8 lakh lives worldwide. The world is struggling to find a vaccine or a cure to the deadly virus. In India also, the spread of pandemic continues unabated, though the fatality rate is much lower. As the pandemic ravages on, the economic impact is hard to measure. While there are green shoots and some businesses are getting back to pre-pandemic levels, the uncertainty over the length and intensity of the pandemic and its impact on the economy continue to cause concern. In the wake of the pandemic, RBI has stepped forward and has so far announced various liquidity, monetary, regulatory, and supervisory measures in the form of interest rate cuts, higher durable liquidity, moratorium on debt servicing, asset classification, standstill, and very recently a special resolution window within our prudential framework for resolution of stressed assets. The framework for resolution of COVID-related stressed assets is a well thought out decision taken in consultation with various stakeholders and is aimed at striking a balance between protecting the interest of depositors and maintaining financial stability on the one hand, and preserving economic value of viable businesses by providing durable relief to businesses as well as individuals affected by COVID pandemic on the other hand. We expect efficient and diligent implementation of the resolution plans by the banks, keeping the above objectives in mind. While the moratorium on loans was a temporary solution in the context of the lockdown, the resolution framework is expected to give a durable relief to borrowers facing COVID-related stress. RBI's response to the situation arising out of COVID has been unprecedented. The measures taken by RBI are intended to deal with the specific situation of COVID and cannot obviously be permanent. Post-containment of COVID, I repeat, lest I am misunderstood. I repeat, post-containment of COVID, a very careful trajectory needs to be followed for orderly unwinding of the various counter-cyclical measures taken by the RBI, and the financial sector should return to normal functioning without relying on regulatory relaxations and other measures as the new norm. Now, I would like to very clearly say it's not as if we are going to unwind all the measures which we have announced. All that I am trying to highlight is that we are very carefully monitoring the situation, and post-containment, after the pandemic has been controlled, and when we enter the pre-pandemic, post-pandemic phase, then only there has to be a very calibrated, non-disruptive, and cautious exit plan, introduced. I am highlighting this point just to emphasize that RBI has taken or is taking a long-term view of things and not just thinking about tomorrow. We do think about today, we do think about tomorrow, we do think about day after, we also think about 1 year ahead or 2 years ahead, what next. So therefore, it's a comprehensive view that we are taking, and by no stretch it should be assumed that RBI is going to unwind any of the measures in the near future. In my address today, as I said, I would like to dwell upon the following theme. It is time for banks to look deeply within, and the focus will be on reorienting banking post-COVID. Just like boosting immunity of the population is the key to tackle the pandemic, the key to long-term financial stability would be to foster tangible improvement in the inherent ability of the banks to withstand exogenous shocks like the current pandemic. As I have stated elsewhere, the causes of weak banks can usually be traced to one or more of the following conditions: an inappropriate business model given the business environment, quality or lack of governance and decision making, misalignment of internal incentive structures with external stakeholder interests or shareholder interests, and similar other factors. Accordingly, the core of resilient banks is made up of good governance, effective risk management, and robust internal controls. And I'm quite, I'm quite pleased to state that the overall, the Indian banking sector continues to be sound, continues to be stable. I'm highlighting these points because these are the areas which need greater attention. I'm highlighting these points not because they're absent or anything like that. I'm highlighting on these points because they need greater attention, and as everyone would agree, there is always a room for improvement. In recent years, the business landscape of banks has undergone significant change. Today, the banks need to look out for sunrise sectors while supporting those sectors which have the potential to bounce back. For instance, banks need to look at prospective business opportunities in the rural sector which remain unexplored despite efforts to support it. Banks also need to look at the area of startups, renewables, logistics, value chains, and other such potential areas. I have just listed a few, but there are several others. The banking sector has a responsible role to play, not only as a facilitator of growth of the economy, but also to earn its own bread. Thus, a complete relook at the business strategy and orientation is the need of the hour. Scale ignites the volume effect in business turnover, but that presupposes bigger size of banks. Despite several reforms in the banking sector since its nationalization, a lot more can be done and needs to be done. With change in time, the nature of reforms needs to be reconfigured. The current steps towards consolidation of public sector banks in line with the Narasimham Committee recommendations is a step in the right direction. Indian banks this way can reap the benefits of scale and become partners in the newer business opportunities across the globe. Larger and more efficient banks, both in public and private sector, can compete shoulder to shoulder with global banks to get a decent space in the global value chain. Size is essential, but efficiency is even more important. Efficiency, however, is much broader concept and requires several other factors to evolve and act along its side. The prerequisite will be to use technology. The quality and ingenuity of technology should match our aspirations of acquiring scale and diversion of business across the globe. The focus of use of technology should shift from transactions-based to business-oriented. While introspecting on newer ideas to improve the health of banks and quality of banking, it is fundamental to reform the culture of governance and risk management. These two areas lend inherent strength to businesses of banking, and a good amount of work has already been done in this direction. As you are aware, recently we have uploaded governance, a document on a discussion paper on governance in commercial banks, and we have received large number of comments, and they are under examination, and we will take into consideration all the suggestions and comments which have been received and come out with a final document. While it is natural that capital providers or investors would like to remain alive to the aspects of how exactly a bank is run, it is worthwhile to allow sufficient leeway to the management of the bank and to the board of the bank to run the affairs of a bank in a professional and autonomous fashion. A decent distance between the owner and the professionally sound management and the board would promote robustness of banking institutions. And this is a point which has been spoken about earlier. So I think I thought let me just highlight and touch upon this area, but this is an area which is constantly under discussion. There will be newer risks with newer business models for banks, especially in the context of COVID and going forward. More so when the banks get bigger and more connected across diverse jurisdictions. High growth by virtue of newer business models can be achieved with clear understanding of one's own strengths and weaknesses. Remaining overly risk averse may seem to be a measure of self-immunization, but will be self-defeating as it would affect the bottom lines of the banks adversely. Risk propensity should be aligned with individual banks' measured risk appetite. The risk management system should be sophisticated enough to smell vulnerabilities brewing within the various businesses and well in advance, and should be dynamic enough to capture the looming risks in sync with changes in external environment. One visible area of concern in the arena of risk management is the inability or the ability to manage the incidence of frauds, both cyber-related and otherwise. The higher incidence of frauds which have come to light in the recent times have their origins in not so efficient risk management capacity of the concerned banks, both at the time of sanctioning of loans as well as in post-sanction credit monitoring. And there are considerable room for improvement in these areas. An effective early warning system and forward-looking stress testing framework should also be an integral part of risk management framework of the banks. Banks should be able to pick up incipient signals of stress faced by their borrowers and take proactive remedial action within the resolution framework established or set up by the RBI, announced by the RBI last year on 7th June. And the rearranging of the loans or the credit facilities which have been given to the borrowers when there are incipient signs of stress, if it is done in a timely manner, naturally it will contribute to preservation of asset value of the borrower. In addition to strong risk culture, banks also should have appropriate compliance culture. There should be robust assurance mechanism by way of internal audit function. This is an integral part of sound corporate governance. And the banks also should highlight on the quality of customer service and redress of customer grievances. I'm just touching upon these points without elaborating further. The written text of my address will be uploaded in the RBI website immediately after my address and this interactive session is over. So I'm therefore not reading out the entire text of my address. I'm just highlighting and touching upon some of the major points. Indian banking and financial system has indeed displayed tremendous operational resilience in the face of COVID and lockdowns. Going ahead, financial institutions, and sorry, before I move on, I must say, when I say that Indian banking has displayed tremendous operational resilience, I must mention and compliment the banks for having maintained operational continuity in such challenging times. And our deepest appreciation goes out to all employees and officers and staff of the banks who have been working day in and day out, manning the front offices. And many of them have lost, some of them, I would not say many, some of them have lost lives while working on the counters and in the front offices. So our deep appreciation goes out to the commitment of the officers and employees of the bank. And it is indeed a sign of the maturity of the Indian banking system that, and thanks to technology which they have adopted, that continuity of operations have been maintained throughout this entire pandemic period. And I'm sure going forward, it will be adhered to. not only in terms of doing the operations, day-to-day operations, but also in terms of, let us say, for example, dealing with the moratorium announcement by the Reserve Bank. And now one does expect, the resolution framework for COVID stressed assets, which we have announced. We have announced very defined and calibrated and, very defined and specified timelines. And I'm quite confident, and I'm sure that the Indian banks, the Indian banking system, both public and private sector banks, will rise to the occasion and complete the entire process in time with due diligence. Going ahead, financial institutions in India have to walk a tightrope of nurturing the recovery within the overarching objective of preserving long-term stability of the financial system. The current pandemic-related shock is likely to place greater pressure on the balance sheets of banks, leading to erosion of their capital. And when I say this, I'm stating the obvious. It should not be read as if the government is sounding a warning signal or alarm signal. When we face a stressful and extremely stressful situation like this, which is once in a century, naturally it affects the balance sheet of banks. As I have said earlier in the SBI conclave, to say that the banks going forward will face stress is stating the obvious. What is more important than saying this, something which is obvious, what is more important is how the banks proactively react and respond to this challenge, which is ahead of the Indian banking sector, which is ahead of the Indian financial sector. So what is more important is how we respond to the situation, and not that we are in the midst of a stressful situation. The current pandemic-related shock is likely to place greater pressure on the balance sheets of the bank, as I said, leading to some amount of erosion of capital. Proactive building of buffers and raising capital will be crucial, not only to ensure credit flow, but also to build resilience in the financial system. And it includes resilience of individual banks and financial entities, as well as resilience of the financial sector as a whole. We have already advised, that is RBI has already advised the banks, and including the banks and also the large NBFCs as well as the deposit-taking NBFCs, to assess impact of COVID-19 on their balance sheet, asset quality, liquidity, profitability, and capital adequacy. Based on the outcome of such stress testing, banks and NBFCs should work out possible mitigation measures, including capital planning, capital raising, and contingency liquidity planning, among others. Upfront capital infusion would also improve the sentiment of investors and other stakeholders alike for the sector to continue remaining attractive for investors, both domestic and foreign, over the medium to long term. Some of the banks have already either raised or announced capital raising. This process needs to be carried forward vigorously by banks and NBFCs, both in the public and private sector. In conclusion, I would like to say that COVID-19 poses several challenges for banks and the financial sector. Proactive action on various fronts, some of which I have attempted to highlight, will enable us to deal with these challenges effectively and maintain the soundness of Indian banking system. I am reminded here of a quote from Leo Tolstoy in War and Peace. I quote, "A battle is won by those who firmly resolve to win it." Thank you very much.